Good evening. This is Ken at Tortoise Capital with the daily quiz for February 6, 2019. So we're going to look at a swing trade quiz, and we're looking at Wynn, WYNN, on a daily chart. So Wynn is a frog champion and a swing champion. That means it is a very liquid stock. It has higher than average trendiness on both intraday and on the swing time frame. So when you take a look at, for example, the daily bars, you see they are mostly signal and not noise, meaning once it starts trending intraday, it's that kind of a day, more so than other elements in the Dow or mid caps. And you can also see on the swing basis that once this thing starts swinging, it has very nice swings, and the directionality is persistent. So having both of those qualities and being liquid and being moved by news, that makes it an ideal candidate to both day trade and swing trade, and to do swing trading one day at a time. So it's a great core and turbo trade. As today's, if we looked at the intraday, you'd notice that in here. So a lot of things going on in the chart here, and some things I want to point out to for interpreting positioning for swing trading, right? So number one, I'm going to come back to this one. I want you to see the actual thing I want you to notice, and that is the relationship between the RL30, which is the moving 30-period regression line, that's the black line, and the middle of the Bollinger Band, which is that a simple 30-period moving average. If we'd gone back a little further, you would have seen where in the sell-off that led us down to these levels, the 30-period regression line crossed the Bollinger Band mean and established kind of a long-term downward trend, and that trend lasted all the way until officially it's over when the RL30 crosses the midpoint of the river. So that's number one, and this is a placeholder for that earlier sell-off. And then that entire sell-off looks like this, and then this is where the 30 RL crosses the Bollinger Band mean. Very briefly thereafter, it crosses again to the downside, so there's more to the downside. Then it finds support at this double bottom indicated by number 5. We'll come back. And then crosses the 30-period simple moving average again, and then leaves the river here at 8, which is the beginning of trending behavior, because now price, the 10, and the 30 have all left the river. So we'll come back to number 8. So those are the moments in which you can be plotting kind of the longer term swing posture. Now at the higher levels, that downward sloping of the RL270 as fair value tells you without further explanation that the trend is down longer term, and you get that from the slope of the river too. But those are kind of the specific points, and I want to make the point about the life cycle of the 30. So the 30 has to get out of the river for there to be a downward trend, and that happens right up around in here. So you have the beginning of trending behavior when price, the 10, and the 30 have all left the river, and so you get this downward trend. Then when you get that P1, the RLCO outside the river at number 9, shortly thereafter the 30 rolls over. That makes this an owl, by the way. Right in here. The 30 then enters the river at Z-1, crosses the 0 line at Z0 at the Bollinger Band mean, leaves the river, not quite here, but just about. It was just about ready to start upward trending. Didn't, failed. So you get another P1, crosses the, I'm sorry, that's the 10, crosses the Bollinger Band mean and leaves the river. So the relationship now between that moving 30 and the simple 30 just shows you how much quicker the moving regression line is to adapt to the 30-period regression line. You see the same thing with the 10 and the dragon. So the dragon is a simple moving 10, and the RL10, which is the price. So you get that same relationship. Different kinds of moving averages on the same time frame. So that's the point I want to make about item number 1. Pay attention to the behavior and relationship of the RL30 and the Bollinger Band mean, which is a simple 30. All right, so number 2, we're going to look at a life cycle of the stretches now between the RL270 and the RL10. And in this downward move, note the extreme distance from the RL270 long-term fair value and the RL10, the trader's price. And then that shrinks here after this downward surge, back and finds support. So at that peak stretch, that is now less. So you can see that the traders are losing the ability to stretch away from long-term fair value, collapses here to 2, gets one more surge down. And now, once that RL10 crosses the 270, now we can say the upside stretch is going to occur. We want to project how far that might be. So you get one little stretch here, find support, and then at 8, instead of failing back, it continues to go up. And now notice this number, this 2 here, is the same size as this one. So if this was an extreme and this feels more like sort of a normal or a natural, it would get this far without a surprise. I'm sorry, this 2 is that 2. This orange, purple one at 3, this stretch is now projecting this stretch. So it's already gotten as far up here as it got far down here. And now the next target is this purple one, this stretch down, mirrored by that stretch up. And so there's still room to believe in 140. This purple line here at 143 goes back to a previous hump of a dragon, which projects all the way across. And really, that highest PSAR flip that we can see on that chart. So that's number 3. 2 and 3 then represents this RLFF lens that takes a look at how far traders have been able to stretch that bow and arrow away from the RL270, and then we can use that to symmetrically project that on the far side for the size of moves the traders are able to achieve. So that's number 3. Number 4, we're going to look at a series of PSAR flips and how nice and long that PSAR move. That's one of the reasons we love Wynn as a swing trade, because it has these long characteristic swings. And then the PSAR flip here, nice PSAR flip to here. Now that long move down, PSAR flip and down and up, and now we're still in this long swing. So we can use the length of those PSARs as a measure of length of trends to expect. So this one is getting a little long in the tooth, but it's not uncharacteristic. So that's what we want to look at here in terms of number 4. All right, let's find number 5. So number 5 is simply taking a look at that swing low between the belly of the RL10 and the PSAR, and the belly of the R10 and the PSAR flip. So that sets up like a double bottom. And so big sell-off, one surge, finds support and takes off. Love this right here. Love this. That's an owl and a P1 and a close above the dragon. And that makes the owl, which occurs right around here, sweet. So that's what we're looking at here at 4 and 5. At number 5 is that double bottom, and why we love that move. And by this time, you notice how much the RL270s come back to the 10, and that everybody's sort of agreeing, yeah, this is the fair price, and the dragon's kind of been just oscillating, and the slope of the river is flat, making this something like somewhere near almost an SQC. How about that? Then the head fake down, and then the turn and go. Like it. So that's number 5. Let's find number 6. 6 is simply taking a look at that RL270 as a measure of long-term fair value. 7 is that 200 period moving average. We're getting back to what will be seen as a breakout and a return to the bull. There's already been a good third mouse move in here, and a second mouse, second and third mouse, and now a fourth mouse once he gets past the 200. So that's number 7. Let's find number 8. Number 8, I want you to just notice this pattern, that you get this RL10 breakdown it pulls back, gets you a little P1, and then immediately fails, so that signals another leg down. So price in the 10 couldn't even get to the Bollinger Band mean. So that's a P1F. So 8 here, and we would also, there's probably an 8 over here. Now on the upside, so we have a surge up. It doesn't fall back to the Bollinger Band mean, but instead comes, finds support at the edge of the river, and takes off. Very powerful signal on that second leg. And then the size of this second leg equals the size of this leg. And the size of this second leg down equals the size of that leg down. So we can use that as a measure, the leg measurement, as evidence of strength of the swing trader's ability to maintain directional momentum. So number 9, we're going to take a look at, what are we looking at here? These are P1s. Here's a P1. There's a successful P1. There's a P1. And off we go. So that's what they look like when they work. 8 is what they look like when they don't cross, but then resume the original direction. 9 is what happens when they actually change. 10 through 21, simply a review of the MACD 4 seasons. So there's the all-important 0 line. So 10 is a rejection of the spring and then a fail all the way through the winter down to 13. And that gives you this entire move that when that fails to get to the 0 and into the summer, right in here, you have to be on that trade, and you get all of this just by the heads up you get from the MACD. So that's the life cycle through 13 is when winter becomes spring. 14, just the signal of when it enters its little red river. I could mark off when it crosses the 0 line and leaves, but it's all in the spring. Now here's where the opportunity was for it to fail further. It didn't. It showed an interest in continuing. So 15 is it breaks out. You can actually get this, and you might have gotten that little move. But the summer is short, especially after that long winter. And at 17, we get the fall in the failure of summer into fall. We get a breakdown below the dragon. Another leg. This size of this leg is the size of that leg, is the size of that leg. So again, you can use the leg measurement as the size of the move that the traders can achieve. So 17 into the fall, 18 the winter, you can get this. Winter becomes spring at 9-ish. Beauty. You get the P1, you get the RLXD, you get a close above the dragon, and an owl in here shortly right around this location. And you get all that move. 20 is when it becomes summer. You get a little pullback, fails to fail further, doesn't even get back to this double bottom. That's at pattern 4. Successful P1, finds support at the Bollinger Band mean and takes off. Love it. And then here's where the at 8 is the beginning of trending behavior. So 20 tells you the summer. You have a long side bias right in here. Off we go. 21 was an opportunity where, like at 8, it didn't fail back to Bollinger Band mean, but it kept going up. This is where that summer became fall. Psych, back into the summer, and off we go. And now our target is up here at 140 and 143 and 150. So a lot more room to go in Wynn. And that's our quiz for February 6th. Keep your wrist measured and your powder dry. Just so you know, this is part of a 100 quiz workshop we're assembling, where we're going to put all these into one workbook and a Dropbox with all these videos and the blanks as an opportunity to refine all of these different teaching points and learning points, but in a practical way. And you can always come back to these and continue to rework them. You won't be able to commit them to memory, is my bet. And this creates a nice refresher and is aligned with our theme of 2019, which is preparation and internalization of the standard practices. Okay, so take good care.